Hello traders and welcome to another video review. Today is Tuesday, January 7th, 2025. Let's take a look at the economic calendar for today. The Asian session was apparently rather quiet this time. We got some data from Australia, building approvals. We got data from the Japan, about 10-year auction. During the early London session, we got data from the UK in form of the Halifax house price index, which is moving lower from 4.7% to 3.3%. And then there is a time of the CPI data across the Eurozone: Switzerland, France, of course, Italy, Germany, and the Eurozone. All of this data will be released between 9 and 11 o'clock. CPI from the Eurozone is scheduled for release at 11 o'clock, and the market participants expect an increase from 2.2% to 2.4%. Unemployment rate should stay at the same level of 6.3%, and the core CPI is supposed to be at the same level of 2.7%. During the US session, we got data, of course, from the US and Canada. They will start at 2:30 in form of the trade balance from the US and Canada, then exports and imports. In the meantime, at 3 o'clock, we got the global daily trade price index from the New Zealand, and then key events for today are scheduled for release at 4 o'clock. We got the ISM non-manufacturing PMI data scheduled for release and JOLTS job openings. The PMI is expected to increase from 52.1 to 53.5. At the same time, we got IVPMI data scheduled for release from Canada, which is expected to increase as well. Then we got Atlanta Fed GDP now at 7 o'clock, together with a 10-year note auction, and at the end of the day at 10:30 we got API weekly crude oil stock. So the second part of the US session is way more interesting than the first part and the full of the data releases. So that's about the calendar. Let's just take a look at the situation on the charts. We are going to start with euro dollar. The 4-hour chart of the euro-dollar is showing us a strong bounce from the extremely oversold market conditions. The bulls broke above the level of 1.33, 1.0333 and 1.0346. So now these levels will act as the short-term technical support. The bounce was capped so far at the 100 periods moving average, roughly around the level of 1.0420. And the market is trying to break way above this level in order to test especially the level of 1.0450 and 1.0460. So those two levels are now the key short-term technical resistance levels, and the market might see, market participants might see bulls testing this level before the further movement is done. The reason for that is, of course, the momentum indicator. There is still room to the upside. There is still room to the upside here on the chart. However, as you can see, when we hit the technical resistance, the chances that the market will stop here and then basically maybe reverse or consolidate are quite high, because we will hit the extremely overbought market conditions. So right now we are still trading inside of the channel. This is the downward sloping channel. This is the upper half. Nevertheless, the market consecutively making lower lows and lower highs, so please be aware of the situation that the trend in the short term is still down on the euro dollar. Let's take a look at the cable to see what is going on here. The cable has broken out above the short-term technical resistance, so let's change the color of the level of 1.2474 and 1.2488. Both of them are now technical supports, and the market is testing the 100 periods moving average and the upper channel line. So as you can see, we still need a bounce bigger than 2.59% in order to see some sort of the bigger better correction or even trend resumption. For now, we got barely 1.65, so we need at least 1%. If we speak about this 1%, this level is roughly around here. 1.2681 is the level that might be clearly visible for the bulls if they want to break above the overbalance, right? So that's the level the market should be heading to. So in that situation, we are out of the channel and we are above 100 periods moving average. Well, the momentum is very, very strong, very, very steep increase of this momentum. So as you can see, there is some interest in buying the dip on the cable. However, this is still not enough to resume the uptrend. If we zoom out, we can clearly see the market is doing lower lows, lower highs, and still the main trend here in the short term is to the downside. Let's take a look at the gold market. On the 4-hour chart, our gold market has been moving inside of this rather interesting kind of a consolidation zone, and there is a visible head and shoulders pattern around the highs of 2,800, and since then we got this breakout below the technical level. So you can see this level here, 2,725, is the major technical resistance, and level just below, located somewhere around 2,720, is the technical resistance as well. As these levels were tested before, and then there's a big breakout and then big movement to the downside after the head and shoulders formation has been made. Right now we can see that the range is clearly defined. The range is very, very clearly defined. There is a extreme level for the range, and then there is one more level here for the 2,583. So we keep trading sideways, up and down as the current situation develops, and neither bulls nor bears, they know where they want to go for now. Local technical resistance 2,664, moving average 2,635. This is 100 period moving average on a 4-hour chart. Momentum keeps going from the extremely oversold to the extremely overbought conditions. So this is that movement here, and this movement is not impulsive. It's clearly some sort of the corrective cycle. It doesn't actually looks very promising to the upside. The bears didn't even try to test the 2,725 level. So right now, with that situation, we got the perfect range trading conditions for the gold. We are waiting for the breakout in either direction. The ranges are clearly established here on this market. Now let's take a look at the crude oil, because the crude oil will be definitely one of the market in focus today. Nice rejection here of 75 level, despite the fact that there is no technical resistance here on the left. The nearest one is 76.23, and then there is 78.45. But the market keeps trading above the moving average. We got this bearish engulfing pattern here, which is showing us that the bears are really, really serious about the current situation. They want this market to go lower. We got the technical, eventually we got technical support at 71.44, very nice level, and this is where the market is heading next. We are coming off extremely overbought market conditions. Now it's our size at the level of 56 points, so we are still on the positive territory. However, with break below 72, this momentum will break below the level of 50 as well, so the bears will be in full control of the market. Moreover, if we zoom out, we can see that the recent developments from this this low might have some Fibonacci relationships. So from the low to the high, measured from the low. Oh, apparently not. There is something missing here a little bit. So there is no market geometry. Very unusual place to stop. Let's say right now. I'm talking about this high, of course, because there's nothing on the left, nothing important there. Local technical support, one more I just found, is 72.85 exactly. So as I said, any breakout below 72.85, 72.72 will open the road towards the major technical support that was tested at least 4 times, which is on the level of 71.44. So please stay focused. Last but not least, of course, is Bitcoin, and the Bitcoin, as you can see, has been seen moving strongly to the upside. And let me just check if we manage to break above all of the Fibonacci retracement levels, so I can just show you guys that all of the things here has been apparently used already. All of the retracement levels, of course, has been used. Yes. So this is the level of 61% of the Fibonacci retracement of the last swing down. It's located roughly around the level of $102,000, and you can see this consolidation here. So we tested this level, but there is no we broke above this level, local high $102,698. So we got the opportunity to rally higher. However, we got this very long shadows, maybe not very long, but long shadows during the recent movement to the upside here. It looks like the bears are defending this level from the upside. And if we move lower, then of course that level will act as a technical support, 99,950. And the other thing is that there is a chance to move lower because we are just we just hit the extremely overbought market conditions on a 4-hour chart. So we need to take we need to do a pullback here a little bit to the downside. Very steep movement here of the Bitcoin from the lows. Very nice movement, by the way, but this level here must be broken, must be violated in order to continue the upward movement. Otherwise there will be no test of the next level, which is 108,278. So right now, stay focused. Please keep an eye on this situation here. It's very interesting how the market will react on this 61% Fibonacci retracement level. There is one level that might be a little bit helpful here. This is that one, 102,758, which is of course the resistance level, located just above the 61% of the Fibonacci retracement. A very interesting place. Let's just take a look what the bears will do. Will they push stronger or not? Maybe the market will start to consolidate, which is good for bulls, basically, because the momentum will go lower a little bit and they will be ready to break towards another target here to the upside, of course. So please stay focused, stay vigilant. Bitcoin is about to do some sort of the important move. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.